Hi, everyone. This is Jason Burak of Wall Street for Main Street, and this is your Wall Street for Main Street podcast for Saturday, March 12th, 2011. Today, we are joined by a very special guest from Estonia, my friend Kevin Kerr, co-author of the Dragon Metals Report on Rare Earths, and also of Kerr Trading and Kerr Commodities. How are you doing in Estonia today, Kevin?
Well, pretty good, Jason. How are you today in the United States?
Very good. A lot better than some of the other places around the globe, Kevin. I'm sure that you've seen the stuff that's going on in Japan and Libya. Egypt's a little better since I saw Max Kaiser actually in there doing interviews this week. And I just want to get your comments, Kevin, on some of the macro stuff. The last few weeks have been just like an amazing, few weeks, and how they're affecting, the food and the energy markets.
Yeah, absolutely. First of all, Jason, it's good to talk to you. And yeah, I mean, watching the tragedy unfold in Japan, of course, our thoughts and hearts go out to the people of Japan. We have friends there, journalists there, trying to check on those people. But just such a tragedy, such a reminder of the tsunami in Banda Aceh, and that disaster. And then, a year ago, Jason, I was with my family in the Dominican Republic. About this time of year, when the earthquake hit in Haiti, and we could have easily been in that same kind of tragedy. We were having dinner right on the ocean's edge, and somebody said, tsunami might be coming, and I had two little kids and my wife. So I mean, it's phenomenal to watch the awesome power of nature and what it can do, and it kind of puts us in our place. So our prayers are with all of Japan. Of course, it's very concerning on many levels. And hopefully we can talk about that as far as the resources and commodities go. Such a pivotal shift now in the Japanese economy, and of course the recovery that will ensue, what's going to happen to the yen, energy prices, and so much else in Japan.
Yeah, those are some very good points, Kevin. I was curious where you think Japan's going to get the money, for the recovery. Do you think the Fed's just going to print it, with the digital dollars? Do you think the Fed's going to be sending over a lot of money here to Japan very shortly?
Well, the printer never seems to run out of ink, Jason. So I guess anything's possible. Yeah, I mean, this is going to be a worldwide humanitarian effort. Obviously, nobody even knows how many people have died yet. Infrastructure is clearly devastated in parts and regions of Japan. Japanese central bank, obviously we saw a big rally in the yen. I concur with a lot of people that are specializing in Forex, and a lot of people that I talk to, that and looking at everything that's happening, I don't think we're going to see a rally like we did after the Kobe quake. We're in a completely different situation economically, globally. But you're certainly seeing some premium come into the cash as that money comes home, and what's probably going to be a lengthy rebuilding process in Japan. So the flight to quality, if you want to call it that, in the yen is happening. I think the real concern, and I've read about this on some of my favorite blogs like Zero Hedge and elsewhere, is the scenario of repatriating that yen back, and what happens to Europe with this? Does it kind of pull the rug out from under a lot of the bond purchases, and where does this move the chess pieces on the table? This natural disaster, what does this mean for Europe and elsewhere? So it's really a scenario that's unfolding very rapidly, and it's too early to really make a trading plan based on this. But clearly we've seen the yen spike. At the same time, we saw the euro move back up on a supposed another recovery plan, which I really question. But here we go. And meanwhile, the dollar continues to fall precipitously, and really we're not seeing anything out of the Fed that's going to indicate anything but an even lower dollar. I think it was Dudley came out yesterday and just reiterated the same mantra that don't expect a rate rise anytime soon, and I think that it can't be any clearer than that. And we saw gold respond to that too, recovering immensely and rallying up another $10.
Yeah, those are some very good points, Kevin. Besides that, with Japan, I mean, there's still the possibility, of a Chernobyl type of an accident. I think over the next 24, 48 hours here, you have, 5 old nuclear power plants, that were built about 40, 45 years ago. These are first generation ones. And, you and me have had discussions about, uranium investing, nuclear investing. And, we're champions of like the newer, safer, second and third generation nuclear power plants. And here are these old, centrally planned, old nuclear power plants that, were past their lifespan. They were only meant to last 30 years. And, it's looking like we could have a potential Chernobyl here on top of all the other macro stuff that's going on now.
Yeah, I've got the headlines here up on the screen. I mean, the meltdown warning that Japan is sending. I mean, we're talking about it's truly the China syndrome in Japan. This is what's happening. I know the U.S. has sent coolant to the reactor. This is a very, very serious situation. Radioactive gas has been released. This could be the real disaster on top of the disaster. And, what this does, Jason, anytime we have things like this happen, is it sets back alternative energy, 10, 15 years, maybe longer. And in a crisis time like this, when we have high energy prices, it's unfortunate because we see, at a time when we really do need nuclear energy, all these fears pop back up. And they're legitimate, of course, because like you said, many of these plants are older. Japan, though, has some of the most state-of-the-art things in place to prevent these kind of things when earthquakes happen. Of course, this earthquake is so gigantic that, of course, there's going to be damage. So it kind of underscores the risks, and that can have a ripple effect on alternative energy and certainly nuclear. Here in Estonia, where we desperately need nuclear, and we have, as you know, access to thorium and uranium, and a place like Silmet, a private refiner of rare earths here in Estonia, has offered fuel supply to the country, desperately needs its own source of energy, but is reluctant to add nuclear. We have shale here, and we import most of our energy from Russia. So we know firsthand what it's like to be dependent on Russia for energy. And longer term, the U.S. absolutely needs to build more nuclear and move into other alternatives. And that's going to demand a lot of rare earths. It's going to demand a lot of energy just to rebuild the infrastructure. This is the way of the future, but we're seeing the risks underscored here by the activity in Japan. I mean, the number of power plants they have in Japan is quite a few. I'm not sure the exact number, but clearly in a country like Japan, in the Ring of Fire, if they can have that many plants and have, again, in this case scenario, only one or two plants that have a problem, it kind of shows how safe this technology is for the most part. It's certainly in a place where they don't have earthquakes, in the western part of the country, not California, but, in the plains, the western part of the country, we could build these plants and have them be fairly safe. So it's definitely going to bring up a lot more debate. And the situation in Japan is changing, rapidly. So hopefully this disaster won't occur, but it doesn't look so good at this point.
To expand on that a little bit further, Kevin, what do you think that the Japan earthquake here and whatever else might follow from the nuclear thing, what do you think will that effect have on oil prices and food prices? Because that they've been volatile lately too, although we're having a little bit of a pullback here in oil and some of the potash stocks and some of the other you follow the soft agriculture commodities more than I do, but they've been pulling back a little bit. Is that correct?
That's right, Jace. I mean, we've seen such a run up in all the commodities. Energy, I have to underscore this because, I had a couple articles come out this week. In one, I was kind of chastising speculators, and that's unusual for me because I am one. But, the truth of the matter is that we're seeing a lot of fear premium and justified fear premium pour into the energy markets. Look, we have Egypt, then we had Tunisia, or we have Tunisia, then Egypt, then, Yemen's got problems, Saudi Arabia firing on their own people. These are the worst case scenarios for oil. I mean, fear is definitely valid. And of course, Libya is turning into what's likely going to be some type of protracted civil war, unfortunately. I think the fear premium in oil right now is certainly justified. But the fear premium can only last so long. We really have to see the supply impact. And we're not seeing a decrease in demand so much even at these levels for fuel now. You guys I'm jealous of in the U.S. because, at $5, it's still awful cheap compared to what we pay here, $7, $8, for a gallon of gas. Of course, you pay by the liter, but, in some places it's up to 160, 180 euros a liter. So, here in Europe, we're feeling the pinch. And I think you mentioned earlier, you've looked at my website. I posted on there, as far as food prices go, what people pay around the world, based on their income, what percentage of their income goes towards food. The U.S. is still among the lowest in the world, around, I think, 6%. And here in Estonia, we're about 16%, 15% of income goes towards food. And of course, it goes much worse when you get to the Middle East. It goes up to as high as 50% of income goes to pay for food. So, that's why we're seeing that unrest in the Middle East. Now, are food supplies running out? Yeah, we have had some problems. We've had bad weather. We've had more demand out of places like China. So those factors have certainly impacted the markets. Speculators, yes, they've added some volatility to it, but they have legitimate concerns. And on top of that, though, and the big story here for all of this, what's driven the oil higher, what's driving food prices higher, is the weak dollar. The cheap dollar means higher priced commodities. There's just absolutely no argument that can refute that. We've been saying this, you and I and many others have been saying this for a long time. This weak dollar policy, the printing of endless amounts of money, has absolutely decimated the consumer. And of course, the poorer countries are feeling it first, these places where they have to put 50% of their income towards these consumables. And so we're seeing those riots there first. But this unrest is moving to Western Europe too. In the UK, they've seen huge spikes in food prices and energy. And what's to say riots aren't going to break out there next? So, this is an unfolding situation. And granted, the fundamentals for some of these commodities are certainly what's driving it. But on top of that and underlying it, what's really pushed these things over the brink is that weak dollar, which now is really not the reserve currency anymore. Let's face it. And I've said this for very controversial. I've said it since 2006, that the dollar would no longer be the reserve currency. And it's not. I mean, the Fed can say it is, and the government can say it is, and economists can say it is. But in truth, we've seen a lot of that investment move out of the dollar and shift into commodities, gold, silver, hard assets of all kinds, and then also into other currency, out of the dollar. And that money won't come back. I mean, it's not likely to come back until we start to get our fiscal house in order, and we're just not seeing any sign that that's going to happen anytime soon. I don't know what you think, but I think that if we look at the comments coming out of the Fed, there's really no solution on the table at this point.
I think I agree with a lot of what you're saying, Kevin. I think as far as speculation goes, I think Ludwig von Mises said it best. I mean, he basically predicted this type of scenario playing out this way, with the central banks just meddling. And he said that it would force people to become speculators with like almost all of their money that, had no business speculating. So I think you're seeing that, and you're seeing, the banks continue to get, free money from the Fed, and, they're not going to hold it because
Right.
these guys are smart. They're not going to hold the money. They're going to put it into, developing markets, or they're going to put it into commodities, or they're going to, if it's credited as a reserve on their balance sheet there, they're going to, do a carry trade with it. So you're going to see, volatility, like you said, as the paper fiat currencies, go down. But, that's the commodities going up to reflect the currency, like you said, going down.
Yeah, I got some grief. I do a weekly kind of a Commodities Confidential letter. It's free. Any of your listeners can sign up for it. But, it's kind of our chance to rant. We don't get too political in our trading letters, but in this letter we do. And, we've been pretty hard on Ben Bernanke, and he deserves it, quite frankly, as does the entire Fed. And so, what we compared it to this week is his ramblings in front of Congress sound like Charlie Sheen. I'm winning. It's not winning. We are absolutely destroying the currency as we speak by keeping these rates low. I don't know what the answer is. I guess I'd be Fed chairman, but we've done so much damage. They've done so much damage to the currency that it's hard to understand why they think it should still be the reserve currency, or can't figure out why it keeps dropping. And I guess it'll just be just more tragedy for the American consumer, unfortunately.
Well, unless they have a good investment portfolio, to hedge themselves and cancel that out. Because, if you're invested in oil stocks and some of the other commodity stocks, gold stocks, and especially silver stocks the last, 8 months, you're doing pretty well.
Well, let's not forget the rare earths. I mean, you and I have been talking about that for a while, and our Dragon Metals report, I know people are very happy that got in. Certainly, you even were in advance of me in a lot of these companies that have done extremely well. And of course, investors that are smart, that have just had enough, are moving into the hard assets and following a trend that's going to continue for the unforeseeable future.
Yes, definitely, Kevin. About the rare earths, the Department of Energy, in the last month came out with another special report asking for more money. And what they want to do with the money, Kevin, is they want a Manhattan Project of rare earth scientists. So they really like as much of the innovations that have gone on already with rare earths, and there's a good amount already. We wrote about them in the Dragon Mills report, and they're also mentioned in our exclusive Facebook group for the Dragon Mills report that we have for people that
I
have
love that group. I love the group, Jason. Don't you? I mean, I go in there, I find out new stuff every day. The people that follow that fan page are awesome. I mean, just an awesome collection of information there. So I highly recommend everybody join it.
Yeah, it's great, to get input from people, in Europe and people in Alaska and some of our friends, all over the globe. But with the rare earths, Molycorp just had earnings a couple days ago. And I'm hearing, I was listening to the conference call, and Molycorp was talking about how they're going to use over 100. They're going to use 100% of their cerium production ultimately for that cerium nanotechnology water filter. And from what it also sounded like they were going to be buying more cerium on the open market to make more of those water filters. So just
incredible. Incredible.
So just the innovations that are going to be going on, just in the next few years with rare earths. I think the stocks right now, Kevin, I think they're taking, a little bit of a break here. I know Molycorp at least, seems like to me it's in a trading range. I think for a long-term investor, someone 2 to 3 years, that Molycorp is going to be in production. I think it's a good time to buy right now.
Yeah, I mean, look, this sector's had a big rush in of people, but I think it's based on a legitimate long-term buying opportunity, and you're going to have to ride the wave a little bit here. You're going to see corrections, just as we have with gold, Jason. I mean, I remember, and I was looking at some video last night of talking about gold when it's about $540. Now, that's not that long ago. We're talking probably, I don't know, 04, 05, not even. And having the conversations then about the $1,500 gold was coming. Now, back then, a lot of the news people I would talk to would look at you cockeyed, and basically make fun of you. I mean, Peter Schiff probably took more gruff than anybody, but a lot of us did, And, here we are with gold clearly at 1,400 and moving higher. And that's the same for the rare earths. If you have some vision longer term, if you just take a look at the technologies that are coming out, like you said, the nanotechnology, the water filtration, Molycorp has the lock on that. And of course, they're going to use cerium, which, really takes a lot of the concern out of the stock price. I mean, cerium is, the byproduct that they really need to get rid of. And here it's going to create a product that's in huge demand. And they're going to even have to get more supply of cerium. So it's just totally bullish for the rares. But I agree with you. We have to look at the stocks there. Are they ahead of themselves? We wait for a little bit of a pullback. We just buy and get in and add to it as the stock goes up. And are we in it for the long term? Which for most of these we are. And the opportunities are endless, really.
Yeah, I think what I've not heard from most other commentators, people who follow the rare earths markets, is I think the rare earths are going to be relatively recession-proof, and not just because they're used in electronics, but look at all the money that's going into alternative energy, and look at the innovations that are coming down the pipeline for the defense or military applications. We're seeing the exploding bullet, the programmable exploding bullet. I think I showed you that article like a couple months ago about that, and there's the Predator drones and some of the other stuff in the targeting systems. So I see the rare earths being fairly recession-proof. Especially as China continues to cut back on that export quota reduction. And the news that I heard, out of Vancouver last month at the Critical Metals Strategic Conference, I wasn't there myself, but I had a friend who went, and shared all the information with us, shared it with you too, Kevin. And what we're hearing that the Chinese will be net importers of not just the heavies, not just, terbium, dysprosium, yttrium, and the other couple heavies there are, but China will be a net importer of all the rare earths by 2015.
Right. Yeah, no, I've heard the same thing, and there's been several really good articles on it, and it's unbelievable. If you think about it, where we're heading. I mean, they're going to have to be importing all of them across the board, and of course the heavies and everything. So, I mean, it begs the question: what about the rest of the world too? Where is this supply going to come from? I mean, it's a very exciting time. But getting back to education part of this, I think the average consumer still isn't aware, or has been misled to believe that a lot of the things that we use these rare earths for can be replaced with something else. Just like any commodity, some of them can be replaced with something else. But in most cases, the technologies require these rare earths for specific reasons and can't simply be replaced with another commodity, another non-ferrous metal, or it's just not possible. I mean, a good example is what David O'Brock showed when I was doing the video up in Silmet, was, look, you can go back to the old iron cadmium, heavy big magnet, and you can carry around one of those Gordon Gekko phones, or you can have your, the magnets we currently use, the rare earth magnets, and have a smaller phone, and the technology, I mean, to really make it simplistic, it just wouldn't be possible without these metals. And we all like our technology. As things get thinner, as our iPads get thinner, as our phones get thinner, as we want to use, photovoltaic glass in the future, and things like that. It's going to require more and more of these elements, and they're going to go up in price. And so will these stocks that produce them.
Yeah, I mean, what most people don't understand, about the whole rare earths market, Kevin, is that the rare earths, should have never been priced that low. That the only reason that they were priced that low was, China was subsidizing all of their production there, and, they were skirting all the environmental stuff. So they were subsidizing it to flood the market and wipe everyone else out. Get everyone, like you said, the best analogy you said, get everyone addicted like a drug dealer, or, yeah. And then just, start jacking the price back up.
No, that's absolutely right. I mean, here they've locked in, 96% of the production. Everybody's going to them. Certainly Japan, 100% dependent, basically, more or less, and elsewhere. And now they've got them hooked, and yet now they got a problem. That, like you said, they're going to end up being net importers. This is I think this is the commodity story of this decade and maybe beyond. Again, it's all technology driven. I mean, these commodities. Also, we didn't have the technology as we have now. The applications we're using these metals for, as you said, the green energy solution is no solution without these metals. The new technologies that are coming on need them, or they won't work. Whether it's water filtration or energy production or vehicles or hybrids, whatever. And so we can't we can't discount the fact that these metals weren't as in demand 20 years ago, and now here we are, and nobody wants to go back. Backwards. I mean, technology is always moving forward. So these rare earths are the new oil, I would say, of the next century. And so it's there's tons of opportunity for the investor who can tolerate some risk. Like you said, we see quite a run up. But, if you can handle some of the pullbacks when they come, for the long-term portfolio, this is just a great investment opportunity, in my opinion.
Yeah, I completely agree, Kevin. I think the rare earths, as more innovations come, they're just going to keep growing the market. So, the more processing facilities there are, and, right now, besides, China just controlling the production and the supply, China also has, almost all the processing facilities outside of, Neo Material Technologies, a Silmet, and the two smaller processing facilities that Great Western Minerals has. So China's got the innovation on lockdown, too.
That's right. And, because of let's face it, there is a lot of environmental concern when it comes to rare earths, and China, has always kind of scooted around that. It may be a long time before we see more and more of these processing facilities in Western Europe and the United States, or wherever we're seeing activity and interest in it. There's a lot of red tape to cut through to get these things in motion elsewhere. So, China does have a true lock on this at the moment. And while it's changing, and a lot of the companies we're seeing in production are growing quickly, this is I think demand outpaces any kind of growth we're going to see, and that's going to continue to make these stocks climb.
Yeah, I was seeing a back of the envelope, calculation with Molycorp, and just the cash flows that Molycorp is going to have when it gets to, phase 2 of its construction project at 40,000 tons per year of production. Molycorp is going to have over $1 billion in revenue generated, at current rare earth prices, just selling the lights. It's going to be monster cash flow. So I saw the PE would be like 5.
Yeah, yeah. I mean, it's the numbers are staggering, and I think Molycorp and some of the ones that we talk about in the report at the top of our list, are clearly in a position to really lead the way. There are others that we didn't even necessarily discuss in the report. In our new version, when it comes out, we might have more in there too, because this situation is changing rapidly. But as the new advancements and new technologies come in, things we can't even imagine yet, I think you're going to see actually demand ratchet up even further for maybe some of these metals that we aren't even seeing a lot of play in yet. So it's just this is truly the true bull market in commodities that we think of when we see a true bull market. Kind of like when oil futures started trading. I'm not that old. I don't remember when crude started trading necessarily. Well, that's not true. I actually do. I guess I am that old. But anyway, when we started seeing heating oil and crude oil and those things trade, people latch right into them in the futures markets. When we see new technologies come on board, we tend to see people jump in with both feet. And clearly these raw consumables are vital to the production of all of it, and they're going to continue on. There's no doubt about it. It's not a fluke, like some people are saying.
Yeah,
it's not a pets.com. This is not the NASDAQ. These are real in-demand commodities, and they're going to continue to be in demand. I hate that analogy. People always compare, the NASDAQ run-up to commodities, and you can't eat a pets.com. You know what I mean? I mean, those valuations were insane, but they weren't really based on anything except, hot air.
Yeah, I completely agree, Kevin. Even with lanthanum there, which is, another light that David O'Brock was talking about, that, there is in abundance in most deposits. Lanthanum, there wouldn't be 15% gains in, crude oil refining if there wasn't lanthanum. So
Right.
these rare earths, they help across the board. Most of them are chemically, their chemical properties are pretty irreplaceable. So I really like the upside. And, as graphene, which is, a composite, it won the 2010 Nobel Prize in Physics. As graphene becomes, introduced, I think we're going to see some rare earths, the rare earths will probably going to be used in graphene too, somehow, some way.
Yeah, I mean, again, I think as the technology grows, you're seeing more and more, as we have these small LCD screens, as we have these new light bulbs that are required all over the place, the non-incandescent lights, I believe, I forget, what is used in those? I forget. David O'Brock talked about it, but,
It's the terbium.
Yes, terbium, exactly. And as these requirements change for environmental reasons, you're going to see things like that. I mean, imagine every light bulb on the planet now needs to be made of this. The glass, the coating inside the glass. I mean, things like that, windshields, everything we talk about in the Dragon Metals report. I mean, that's just the tip of the iceberg of all the things that all of us use every day that have some form of rare earths. And again, I think that just goes exponentially greater as the technology improves, and everybody wants thinner and smaller and safer and cheaper.
And next is probably bendable too, with the graphene. But I think I saw that Apple's new iPad tablet is like 33% lighter, so that wouldn't have been possible without rare earths.
Well, no, and of course for the battery technology and any magnets, anything that's used in it, I agree. I don't know exactly what the components are made of, but I have to bet that quite a bit of it, to make it that light and that much lighter, is increase the amount of rare earths that are in it.
Okay, so thank you very much for talking about rare earths, Kevin. Moving on, let's talk a little bit about copper here. Copper is a leading economic indicator, and I tend to watch that in the oil price. They tend to be more volatile, but, copper had a little bit of a pullback here. Do you think that's somewhat alarming? Do you think that means that the commodities could experience, a bigger pullback across the board for, a few months here as we wait to see if QE3 gets announced or not? Or do you think that, this is just a healthy thing? Because copper basically pretty much has gone straight up. I really don't even remember a pullback the last 7 or 8 months.
2 or 3 years. Yeah, no, listen, I mean, healthy markets correct from time to time. And copper has been one of those markets that I've been fairly outspoken on the last few years, saying that I really thought I was getting ahead of itself. Now, I didn't ever short the copper. I don't trade it because when I would trade it, I would trade options. There are really no liquidity in the options on copper. So looking at it, though, it's just not been a market I've found tradable. It's at a level where I think it's had such an incredible run for such a long time that I'm thankful that we're seeing a correction at this point. However, I don't think it's an indicator of long-term, sell-off in a bubble in the commodities markets. I do think copper has further to correct. I know that you may disagree with me on that, and we may not see it because speculators and also demand remains fairly high. But these prices are getting up there. So I would be wary to be getting long copper here. Look, we have a potential real estate glut in China. I know that longer term, it's going to continue to grow. There's no doubt. But there is a lot of vacant property and concerns in China about a slowdown. So, the industrial metals, as far as building goes, and copper is a clear indicator of construction and housing, etc. I think is trying to send us a little bit of a signal here. I wouldn't read too much into it. And again, even though I think, and I've said this for a few years now, it's probably going lower, I am not willing to short the market just because my trading philosophy is not to step in front of a freight train. And, and it just doesn't offer me a great opportunity on a risk-reward basis. We'll have to monitor copper. Copper, we call it Dr. Copper for a reason. It's a good indicator of what forthcoming economic news we can expect. And so I think it's sending us a little signal that some things may be a little top-heavy here and susceptible to correction, including oil, quite frankly. But that is a whole other subject because the volatility in there, based on everything that's happening geopolitically, is certainly off the map. So the copper, I think, is sending us a little signal to be cautious here a little bit.
Yeah, I was talking with a friend who had put like a put option bet on the oil price going down, and this was actually before, Egypt, and I told him, I was like, oil's going to be volatile. I was like, why bet just one way? Why not, bet like a long straddle, buy puts, buy calls? I don't expect oil to, stay flat. I expect it to go up and down. So I agree. I think that's what's, oil and copper going to do. Do you expect food prices to start going up higher, or do you think there's like a choke-off point, just like in oil, where like the food prices and just continues to create political and social unrest, and it looks like Saudi Arabia is on the brink too, where they just fired. I think some of the Saudi Arabia police just fired into a crowd a couple days ago, and they have planned protests. I think next week too. I think they might have already had one, but I think there's some more next week.
Yeah, I was quoted in an article on Market Watch the day before the riots and the protests in Saudi Arabia, and I said, well, I was chastising the market a little bit, saying, look, there is plenty of supply of oil right now. For the moment. But I also said that, look, Saudi Arabia has the potential to erupt, and some experts have said, no, it's not the same as Egypt. It's not the same as Libya. The people are more conservative. It won't happen. The government, has got tons of money to give away, but this goes beyond that. This is really, this is certainly about pricing and food and quality of life, but it's also about human rights. And, having been to Saudi Arabia, I've been to Dubai and Abu Dhabi, I know the region fairly well. And the idea that it's just about higher prices is not accurate. This is about a long simmering equality issue, freedom of speech, freedom of internet, freedom of a lot of things, freedom for women. And so this is more of a social unrest. And so what we saw those riots put down very quickly by a very brutal regime. I think the Saudis are portrayed as more friendly. Well, they are more friendly to the U.S., but the regime is probably one of the most strict in the Middle East. And they put that riot down quickly to avoid any type of activity like in Egypt or elsewhere. However, if the people rise up and really things get out of hand there, the whole bets are off as how high oil can go. A prolonged disruption out of Saudi Arabia is absolutely what could drive oil prices sky high overnight. And if you throw it up to another level, If Iran gets involved and we see any kind of activity with Israel, well, then now all bets are off the table of what occurs next. This is a very, very serious situation that I think could escalate, and I think trying to poo-poo it and say, well, Saudi Arabia isn't like, we don't know what it's like. We don't know what could potentially happen there. So I think you're seeing that fear premium, really swing wildly day to day now. And so, like you said, for traders, certainly I'm using options on the oil because the futures are just too volatile right now. We can get some good premium on the options. As things all drop, we see some good opportunities to buy some oil producers, R&D, and equipment makers as well. When we see those big pullbacks, we're going to see wild swings. Is it going to be like '08 where we saw a run up to 147 and then a drop down to 50? I don't know about that, but it's possible. So really need to protect ourselves using a risk management scenario, like you said, straddles, whatever we need to do to be able to take advantage of both sides of that market and really protect ourselves. I don't think you can say this is just going to continue to run higher or it's going to go much, much lower. I certainly think there's more upside potential right now than a big, big drop. I don't see widespread peace breaking out anytime soon, but I certainly see some landmines that could get hit to drive this up. The question is, how far does it go and how long does it stay there? And that's the real question for traders. If they're buying the futures or they're looking at the options on the crude. If it's going to go to 120 or higher, how long does it stay there, though? And for that, we would need sustained disruption and really start to see the oil supplies drop. So it's a day-to-day thing that we need to monitor.
Some very good insights, Kevin. As far as the oil crashing again, I think that would be very, very bad long term for the U.S. trying to wean itself off its oil addiction. When oil got up to that price of 148 in 2008, I think it was, if it would have stayed anywhere around there, there would have been investments put in, for better renewable stuff, and we would have started making that transition that we need to make. But, oil crashed and, the consumer's like, oh, I have cheap oil again. For whatever reasons it crashed, like I've heard rumors that part of the or all of the strategic petroleum reserve was indeed, dumped onto the market then. So, you're hearing people demand Obama maybe should do that now. I think that's ridiculous. If Obama really cares about renewables, then, it'll be a lot of pain in the short term if oil goes 120, 130, 140. But if it stays there, then we're going to have to make hard decisions that we have to make anyways, and we'll be, better for it long term.
Yeah, I mean, I got a lot of grief back then when we hit 147. I said, this is great news, and a lot of people didn't want to hear that back then, but it was, the oil addiction in the United States, and I'm a U.S. citizen. I mean, I live here in Estonia, but I was in America then. And honestly, the United States has been really spoiled by low prices for energy and for food for many, many years. And it's made us weak and it's made us dependent. Just like you said earlier, like a drug addict, and the drug addict saying, I just need one more fix, that's it. I just empty the SPR and we'll be okay. That is ridiculous. The SPR supply maybe if stretched out could last about 60 days. Some say longer. I think it's shorter. Bottom line is if the spigots were turned off in the Middle East, we have a very small window of how that supply could support the U.S. energy demand. And then what? And the bottom line is all that is like a Band-Aid on an amputated arm. We are dependent on fossil fuels. And the only reason we saw change, the starts of change, where people are saying, okay, maybe I better carpool. Maybe I'll look at a hybrid car. Maybe I won't drive to work. Maybe I'll start telecommuting 2 days a week. Maybe I'll, whatever the answer was, it started to happen when we saw oil at 125, 140. Then people really started to get serious, saying, whoa, I can't afford this. I better start looking at some alternatives. That's when we started to see solar stocks climb and people looking at alternatives for their heating. We started to have the discussion again about drilling domestically, even in the Anwar, which we should be doing. And I know that's a heated debate, but it's really absurd. A lot of these things are things that come on the table when prices get to that pain threshold, as I call it. And that pain threshold, unfortunately, now I think is even higher in the U.S., probably at $175 a barrel when gas gets to $6 a gallon. It used to be probably 5. Now we're at 5. So I think it has to go to 6 and maybe higher. And people start to say, wait, I'm spending 20% of my income on, fuel, maybe more. And I've got to make some changes. I need to put some solar panels on my roof. I need to buy a smaller car. I need to, And unfortunately, the only thing that's going to make people really make changes is pain. And we've seen that. And so I don't wish for higher oil prices, but I think, unfortunately, there won't be any change unless we have it. The real, I don't want to ramble too long, but the real problem is when we saw that spike in prices, we saw all the equity, that was invested in some of these great alternatives, like whether it be shale or whether it be, forget about corn-based ethanol. I mean, that's just a joke. But if we look at, we're talking about building more nuclear, pebble bed reactors, or whatever it may be, solar, geothermal, and all that was off the table when oil prices dropped back down. All the, quote unquote experts and the government said, oh, it was all just speculators that drove the price up. And so all that money got sucked out of those alternatives, and they went bankrupt, many of them. Stocks went belly up. And so now we're even more behind the 8 ball. And I warned of this a few years ago, and here we are. And, what are we going to do next?
Those are some absolutely great points, Kevin. To add, I think we also, should be drilling offshore in California, where California has a lot of oil. California is bankrupt. If they, actually allowed the oil, then California might not be bankrupt. And then we should also, should be drilling, offshore in Florida, Virginia, here in my state of Virginia. I think there's plenty of oil, offshore where we don't have to go, super, super deep in the Gulf of Mexico to do it. But that's the way, the tax laws were forced and the other laws that were written that the oil companies felt that they were forced, to go out there in the Gulf and, risk that stuff. I would love to see the alternatives become viable. I would love to see thorium nuclear reactors here. But it's a technology we invented. We invented nuclear power. We invented thorium reactors. And yet, the Chinese are the ones now with the thorium who are probably going to end up, perfecting it where, there's very minimal waste and there's no, weapons-grade plutonium as a byproduct. So this is just, bad policy. If they just let the market, they didn't try to intervene, I think things would be better. But, we just continue to see, bad interventionist policies here in the U.S. And, the politicians...
We're addicted. We're addicted. I mean, it's true. The hard decisions. We haven't had an energy policy in the U.S. for decades, really, a true one. And like you said, we have the technology. We invented a lot of it, and yet we're not using it. We have the resources at home, tons of natural gas, tons of fuel, and also offshore, like you said. I know you hear a lot of the environmentalists come out and say, well, yeah, look what happened with BP. Look, I mean, nothing's 100% safe, but this can be done a lot safer than it's done in China and Russia and elsewhere, but it still needs to be done. The luxury of saying, we don't want to drill here and we don't want to, those days are over. I hate, the American dream has changed. We have to take advantage of our resources at home. And the Anwar argument particularly bothers me. First of all, it would take decades to get it going and cost a lot of money. But the point is we need to get going with it. And this area is so small and could provide so much that, unfortunately that argument gets squashed out because they show some pictures of polar bears and stuff. But this is what we have to come to the realization that we have to work together, nature, environment, and our resources that we can use, and also find alternatives, really absolutely put money towards finding alternatives to this dependence on fossil fuels and other things. And the rare earths play a big part in that. And that's why, you and I talk about it so much and why people are really starting to turn and say this is a great investment for the longer term. Because it really is the only way out. It's the answer. America's great at technology. We need to put that to work and find a solution for our energy dependence on, the most volatile region in the world, which is just destroying our economy, really.
Great points, Kevin. Before we wrap up here, just want to get your opinions here on the rest of 2011. We have the potential here for QE3. I know there's some people saying we can't have it, but who else is going to buy the, U.S. Treasuries, especially when Bill Gross is jumping ship? So I was wondering, what you think macro-wise, how things are going to play out probably for the rest of 2011. I don't even want to ask you after 2011, let's just concentrate here in 2011, how things are going to play out, and maybe like talk about how you think gold and silver are going to perform in this environment, or some of the commodities you think where there's value, or some of them that'll outperform maybe for the rest of the year.
Yeah, well, I like to pull out the crystal ball every once in a while, and we can make a lot of guesses. I like to use qualified guesses. I think we have to look at it on a quarterly basis. I am concerned. I've gone on the record. I'm a long-term bull in the commodities, Jason. You know that, and there's no question we are in a long-term bull market. My friend Jim Rogers and others have been saying that and remain extremely bullish. I think, though, as we've already talked about a little bit, in certain markets you have to say, has this run a little bit too far, too fast? It's hard to take short opportunities in a lot of these commodities because a lot of premium doesn't get added into the puts as quickly as calls. So look for pullbacks in some of the commodities and look for opportunities to buy longer term, certainly in the commodity stocks. Whether, you don't have to necessarily trade the futures market to trade agriculturals. You can buy agrium, you can buy potash. If you believe these are overpriced, wait for a pullback. But, demand for these things, Syngenta is another one that comes to mind. Look for these things to continue to have high demand. I think that agriculture is going to continue to be extremely strong. We have a growing population. We have a higher taste for food. And so energy prices climb, food prices will climb as well because agriculture is a hugely energy-dependent industry. So I expect agriculture and energy long-term to be extremely strong. The prices we're seeing now don't even reflect anywhere near what they'll be in 10 years. And the population doesn't reflect what it'll be in 10 years. We see some of the metals. I mean, they really vary. The industrial non-ferrous and the precious metals. Gold is reflecting the concern of hyperinflation, which isn't going to change, I don't think, anytime soon with the printing of money in the U.S., which QE3 will just, you might as well call for $1,800 gold now, if we see that. And silver, I think, looks even stronger. And that could be because of the pricing. That could be because of the fundamentals underlying it. But I like silver a lot. We just got out of some silver positions just because they had incredible gains or options, and we took those off the table, but we're ready to get back in. And again, you might have to ride some volatility on this, but if you're in it for the long haul, buy some physical silver, buy some coins, buy some bars. I mean, this is a commodity that's reflecting true value, and we're seeing a lot of fiat currencies, whether it's the euro, the dollar, or whatever, continue to get hit. And I don't know when that's going to right itself, if ever. And so, we're going to continue to see investors really move and really broaden their investment base into some hard assets, other currency, or, whatever they need to do to protect themselves, hopefully.
Yeah, I see silver, the silver story. I see a lot more people, silver's gone mainstream. I think we're definitely in phase 2 of this bull market here in silver. I think Wall Street finally, now after in the last few months, I think finally Wall Street's now all over silver. I see silver talked about a lot more than in the past, ever in the past. And with that being said, I still think silver is going to outperform gold. I think silver is more undervalued. Jim Rogers said on the next dip he would buy more silver. So I think the gold to silver ratio, I think silver's got a shot to get down to 30-1 by the end of the year. I wouldn't be surprised to see it down to 31. We're around 40-1 now, so that would be a pretty nice outperformance there by silver. But gold's still good. The gold mining companies at these prices, gold mine companies can make a good amount of money. Now, that's finally starting to trickle in. I think they've got their input costs fairly well controlled now. And with the gold price this high, let's just say if they can't make money with the gold price this high, you're probably in the wrong gold mining company.
Yeah, you do have to pick and choose when it comes to the miners and how they run their operations, And I think high oil prices can put a damper on those. But if we do see oil, say fairly stable here, yeah, you're right. If a mine isn't making money with gold at these levels, then it's probably time to look at moving into some other stocks, ones that are performing well, because there's plenty to choose from, and get rid of the ones that aren't.
Yeah, or if someone doesn't want to pick out their own stocks, they could buy a gold miners ETF, like the GDX or the GDXJ for the gold and silver mining juniors. As we wrap things up here, Kevin, where can I buy the Dragon Metals report if I'm interested in rare earths and I want to learn about them?
Yeah, that's we have our own site, Jace, dragonmetalsreport.com. dragonmetalsreport.com. There's a great interview on there I did with Max Kaiser a while back. There's a sample of the report, 3 or 4 pages in there. It's showing, we talk about in real understandable terms, what rare earths are, what they're used for, what they may be used for in the future. And then, you and I put together a comprehensive list of some of the key companies to look at and also some of the ones that aren't as well known. And really leave it up to the investor to decide, pros and cons for each one and how they've performed. And, I'm very proud of that report, and I think it's helped a lot of investors get into this sector and make decisions on how they want to move forward with it. So, yeah, dragonmetalsreport.com.
Well, thank you very much, Kevin. I might also add that Jim Poplava of the Financial Sense NewsHour, who also manages, a good deal of money, mentioned that our Dragon Metals report was a must-read, and he keeps asking us when we're going to have updates for him. So
yeah, Jim is fantastic, and I think you and I both need to get back on there and update investors. And so much, it's changing so rapidly. So thanks to Jim for that.
Okay, Kevin. So what other websites can I find your work on?
Well, absolutely. At kerrtrade.com, that's where we have our blog, and we have guest commentators and a little bit more about our newsletters there and video, etc. So, yeah, kerrtrade.com. And there's a link there to the dragonmetalsreport.com, too, which makes it pretty easy.
Okay, great. Thank you very much, Kevin.
Thanks, Jason. Take care.